we will do whatever time it takes within the regulatory process. Therefore, it is shareholders, RBI, Competition Commission and any other approvals. We will move through the whole process. We are hoping that this gets done by April.
If you could tell us about the synergies, how will the branch network now look for the combined entity, and also, take us to the loan book, how will it change, because ING specializes in SME financing. So how really things will change for the, combined entity, if you could elaborate?
I think you said it. If you look at the network, currently ING Vysya Bank has got 64% of its branches in the south of India. In our case, 80% of our branches are in the west and the north. Going forward on the merged entity basis, our south combined presence comes to 38%, and therefore all the three categories, west, south and the north, we get to a much more normalized level on the merged entity, and the complementarity of the network is awesome. And along with that, the whole area which you mentioned about lending, we are present in almost all segments, but there are some segments which ING Vysya has done extremely well, and one of them is SME. We are hoping to leverage of that on the combined basis and really make the Make in India dream happen through SMEs.
Mr. Sareen, this question is for you. The cost to income ratio for ING Vysya Bank is much higher versus Kotak Bank. So in terms of cost rationalization, in terms of improving the return ratios, what kind of a timeline will you really take to take the integration process really through?
I think it's important to mention here that at the heart of this partnership is not cost cutting, is cost efficiency and probably cost avoidance. But more importantly, I think the opportunity in terms of revenue growth, the opportunity in terms of cross-sell, the opportunity for 2 million of our clients to have access overnight to the rich product suite across Kotak Mahindra Bank, across all its conglomerate companies, be it life insurance, be it asset management, private banking, wealth management, and on the other side, our SME business, our international clients access. I think that's important to note that the ING group is arguably the largest network in Europe, and that gives access both for inbound business, for international companies coming in, and outbound business for the entire range of Kotak's wholesale customers to access the European markets. So really at the heart of this is revenue complementarity rather than cost cutting or cost rationalization. I think that's an important point in this partnership.
Mr. Kotak, your stake, rather your family's stake, combined entity will be close to 34%. The RBI guideline says that you have to come down to 30% by December 2016. So in order to comply, what is the future plan? Because you have a timeline of 2 years, but what kind of a plan? Will it come the inorganic way? Will it be like a block deal that you did with the Canadian Pension Fund? How do you really plan to do that?
I mean, just to remind you, at the time when we started the bank, our promoter stake was 63%. At that stage, RBI required us to hold 49%. The rules of the RBI changed subsequently, applicable to us as well. And from 63, we will be down to 34. That is nearly half. So 4% on a relative basis over a more than 2-year period is not a big deal. And we have all the options available. And at this stage, we are keeping all options available.
You were talking about the opportunities that you see in the digital space. Uday Sareen's team has been specializing in that thing. What kind of a global exposure do you get apart from the digital banking opportunities that you see in the domestic?
I think Uday is the best person. Uday Sareen is the best person to answer this. He ran a digital bank in Germany, which was, as I understand, the third largest consumer bank for ING for a few years. Uday, you want to talk about digital?
I think one of the immediate synergies for both our institutions is the fact that digital is at the heart of the strategy. We really believe in that, and the fact of the matter is that in the next 5 to 6 years, 350 to 400 million of our fellow country people will actually be digitally will be digital banking consumers. So from that perspective, while of course from a branch network perspective, this catapults us to the 4th largest network amongst private sector banks, but the opportunity to provide best-in-class and global digital services, both in terms of acquiring customers and also in terms of customer-initiated digital transactions. I think that's a fantastic opportunity, and there is complete meeting of minds in that space from our perspective.
Mr. Kotak, last couple of questions. What will ING Vysya Bank do with their stake in Kotak Bank, the combined entity? Because earlier on also ING Group held a stake in Kotak Bank and they sold off. So will history repeat itself? Do you have any lock-in provisions for them?
I think the right question on this is got to be obviously answered by the ING Group. Post the merger, ING Group will own 6.5% of the merged entity. They will be the 2nd largest shareholders after the promoter family, and they have agreed to a 1-year lock-in post merger.
And what kind of a management access are you giving to the ING Group apart from a board seat?
Currently, ING Vysya Bank board will get 1 seat on the board of our bank, and we are working towards a strong cooperation arrangement with ING Group in terms of a framework.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.